Hello, World Wide Web. Welcome back to my stock channel. This is James with an update on another stock, Zoom Video Communications, Inc. ZM is the ticker symbol, $68.11 per share. Its 5-year history says the story of COVID and its downfall. The interesting thing about this company is you saw that downfall, and it's just festered last 5 days, last month, last 6 months. They just came out with a stellar earnings report that looks like it brought them all the way back to some glory. Now, let me show you the chaos of this company. March is just tearing it apart. I'm not sure why. The earnings expectation for this quarter right here, you notice they just took a big loss January of 2023 of $104 million. The following quarter came in, they earned 98 cents a share, and I'm guessing that's around 200 million plus. So their their March would have been over here, and this yellow line would have been way up here. So they just kind of made a really strong comeback. We saw a spike on the chart, and then we saw the spike vanish. It looks like they released earnings in late February, which was actually a little bit early. Is this a seasonal business, or are we looking at a somebody with a really profitable January all the time? No, January over January. This one sucked ass. But I'll tell you what, the March-February report, it was another screamer. So the PE is really high. It says 199 on Google, but I'm saying it's probably 50 cents to 99 PE, somewhere around there, 50 to 90 times earnings. You can do your own math. It just depends on what pace you look at. If you look at this as the pace, they're making, 200, maybe 200 to 400 million a year in earnings, maybe $1 a share. And at this current pace, they're doing $4 a share. The new screamer that they just came out with. This seemed to be a one-off. These seem to have, me being less concerned with them now, it's kind of like they found the revenue again. Maybe they quit running some ads on TV, and they're just showing this big number again. The good news about Zoom is they're a growing company annually. They had a big help with COVID. But look what happened after COVID. They're leveling off. Maybe this is worldwide and they're still having COVID and China things going on. But they're leveling off, and all throughout the year, they're not growing anymore in revenue. But they are maintaining themselves as a $5 billion almost company. Monster with potentially a really nice price. This is a website service. It requires servers. Their operating expense is $1 billion almost. I'm sure that can be cut down considerably. It's probably mostly advertising. Their balance sheet has remained stable and has grown throughout the years and remained stable. Their quarterly balance sheet is not growing. You do kind of see anti-growth this year, but you also see all of the comeback here of the profit in this quarter that you can't see because Google has obstructed it from our view. Hopefully any day it'll be up here. But accurate price per earnings, somewhere between 50 cents and $1. Should this price be 68 right now? I don't know. If you think the company's going to double, then yeah. And if you're making a bet on the future, then yeah. If the company stops growing, is it worth this? No, it's worth half this. But if it's still a growth story and not a decline after COVID story, they might have to give some of that back. All the schools are going to have to quit using it, you would imagine. You would imagine that there'd be a lot less need for it You would imagine that this huge pucker that they got from COVID, part of that's going to go away. I would expect to see some down revenue. Maybe China kept them alive all the way through February with their shutdowns. Maybe this is a case of that happening. Maybe COVID's just not over. Enough of the world is still freaking out about it. But they found their profit again. That's the good news. Let me check the revenue for this latest quarter. I know the profit recovered. Wow, that was an unbelievable challenge, and what a rabbit hole. So many different websites with so much different information. This last quarter, it looked like 1.12 billion in revenue with an earnings per share of $1.20 or 91 cents. It's close to the other website that I found. So let's see if what my purpose here of that check was the revenue. I wanted to see how the revenue compared quarterly to its sister. The same thing. Maybe this is it, but that's not 91 cents a share. That's a negative. And this was the one that came out in late February, February 22nd. They actually tied the revenue again, 1.12 billion. The analysts were saying 1.1. So a very slight beat on revenue. And I don't know whether they beat the estimates, but the estimates were estimating that they were going to do the 90 cents. And then they did it. So the estimates knew that this was happening again. Actually, not this. This is way over. This is this happened again. Yeah, right back on course to almost $1 a share per quarter. They're right back up to being a $2 million earner or a $1.5 billion a year earner. They had a really bad year, folks. Maybe they had to spend advertising to keep the revenue alive. We do have another flat line on revenue. So that would be 1, 2, 3, 4, 5, 6 quarters with no growth. Can we call this a growth story anymore? I don't know. That might have greatly changed. China just reopened. Will people quit losing Zoom and cancel their subscriptions in the future? Will they need to because they're not doing school from it anymore? Or the parents will notice it's still being billed to them every month? Or the work at home crew with the offices, that seems to be fading. Perhaps they won't need it anymore. Companies will have a much smaller Zoom bill. I don't know. I see it coming down. I see the PE very high. I see somehow a company holding it together and then throwing up a profit again after 3 crappy quarters, 4 crappy quarters practically in a row, even though they made 113 million. That's still just tracking like a buck a share, which they're valued at a 60 PE at. I think their ability to do this and to put this up on this number is what's the PE is being given for. That's kind of the expectation. And they did live up to that expectation in the latest quarter. For that reason, the stock should probably be recovering. But the fact that the revenue flat line is probably making it not recover. So I would say people are confused about this one. Is it coming down to a correct PE of a normal company that's either going down in revenue or flatlining in revenue? Probably. It might still have half to lose on itself. I couldn't give it this kind of a PE unless it's a growth story of mammoth proportions. And I think their growth story is over with COVID. I think we're seeing the flat line right here. And then I think we see down revenue lines. And then the entire earnings per share starts to crumble. Instead of making 1.38 billion or a billion for the year, and be back to making not even 672. They could be back to making $25 million a year. That's where they couldn't be, and that's even in 2020. Before 2020, I would say it's safe to assume they had hardly a product. They had a $330 million a year company, which is pretty strong, I guess, but only $7 million in income. So I'd circle this and I'd say that's what not COVID looks like. And I would look at all of this as COVID, and I would see it leveling off, the growth ending, the losses festering, and somehow maybe they just quit running ads for the quarter. And that's what their estimates were and the analysts' estimates were, because obviously they're severely profitable at this price if they want to be. So if they just laid off the TV commercials, it would explain another flat line with a big boom in earnings, because they didn't spend as much. Their operating costs would have plummeted tremendously. Maybe they were trying to hold this blue line. Maybe this blue revenue line is a collapsing line, and they kept it from being a collapsing line by spending more money on advertising, and then they just let off the advertising and somehow held it because of all these new customers. But if they're not going to advertise with all of their money and then more money than they have, yeah, I think they're gonna have to start coming down. The COVID thing is going to be over, and that was their catalyst. You can count on it not being as good as COVID from now on. I think you can count on that like rain and sunshine. Zoom Video Communications, I say down to $30, just my wild guess, maybe $40. Sorry if that bums you out, and if this thing is still going to triple in size. Well, before COVID, they were only at a paltry 622 million for the year. They were, how much is that again? 622. Why does this chart look so much bigger? This blue line is 4 billion and this one's almost a billion. It's hard to believe this one's only 4 times bigger than it, maybe 5 or 6 times bigger than it. Seems a lot bigger than that. Wow, these lines shoot up fast. But yeah, I see them coming back to somewhere around this form. I don't see them hitting 2021 again in the end. And as the revenue falls, I guess we're going to see this yellow line vanish also. Right now, they're still holding it together, probably buying customers, and then they let off for a quarter. And they realize they're not growing by buying customers, so maybe they let off and they're conceding the fact that they're going to have to live in a post-COVID world. They're going to lose employers, they're going to lose classrooms, they're going to lose a lot of people. Bearish on this one, $68 a share, 30-40 bucks. It's just losing its ass, and I guess the whole world kind of feels like me with it coming down 42% over the year. It's just a logical guess that they wouldn't do as well without COVID. And even though their numbers haven't fully reflected it, it's showing the signs of a level out. And it shows signs of increased spending to maintain that level out. This is them trying to keep a non-falling revenue. And then maybe you can escape for a quarter or two with the same revenue without the advertising. But I think eventually advertising is what drove these sales. And without those new customers signing up and more leaving, it's going to go down. So yeah, Zoom and I don't know, put options. What do you think? Hope you enjoyed my video. I'm James. Please like the video and subscribe to the channel. I'll do more updates in the future on this one. We'll check in with this one next week. We'll see where they're at. We'll see where they're going. See if there's any news on their future expectations. Have a wonderful afternoon and see you next time.